Today, I'm going to share the trading plan that saved me from losing $5,000. Yes, you heard that right. This strategy not only saved my account but also changed the way how I look at the markets. You have clicked on the right video if you want to stop reacting too late and start making informed decisions before a major move in the markets. So, what is the secret? It is all about understanding the difference between lagging factors and leading factors, and why focusing on the right one is so crucial, especially in crypto markets. Have you ever noticed that many traders rely on information that is already old? They are making decisions based on lagging factors like the closing price or economic data like inflation or GDP. But in the fast-moving markets like crypto, if you are reacting to what is already happened, you are already behind. What you need to focus on are leading factors, those key factors that signal where the market is likely headed. And when you do that, you can avoid the painful losses like the $5,000 hit that I almost took. Let us start with lagging factors. These are the signals that tells you what has already happened in the market. Think of things like closing price. It shows you where the market closed yesterday, but it doesn't tell you where it is headed tomorrow, right? GDP or inflation rate. All of these are important in macroeconomics, but they lag behind the current market conditions. They reflect what is already happened on the last quarter or even last year. So here is the problem. Many traders rely on these lagging factors to make their trading decisions, which means they are always reacting after the facts. In high volatile markets like crypto, by the time these factors show you something, the big move might have already been over. So why leading factors matters, especially in crypto markets? So these are forward-looking signals that give you a head up on where the market could be moving. They show trends and market behavior that are happening right now and give it a chance to act before the crowds. Here are some of the examples that are especially important in the crypto space. Money inflow to exchanges. This is a key factor that shows you when a large amount of crypto are being moved onto the exchange. Oftenly, this is a sign that big holders are preparing to sell, which could lead to a price drop. So, by catching this early, let you prepare before the dump. Secondly, leverage ratio. This tells you how much risk traders are taking by using leverage. When the leverage is high, it often signals a big move is coming, because price swing in either direction could cause a cascade of liquidations. Crypto markets offer tons of real-time data that you can use to see these leading factors in actions. And that is why crypto traders have an advantage, because we have access to on-chain data and market metrics that stock traders don't. So, let me tell you how focusing on the leading factors could save me from a 5,000 losses. In August 2024, instead of taking a 5,000 hit, my strategy flipped the narrative. While most were caught off guard by the Japanese government's surprise in the interest rate hike, a black swan event that sent a shockwave across markets, my system detected the leading signals early. As the traditional market plunged, with the Nasdaq dropping nearly 10% and Bitcoin crashing over 20% in just a few days, my strategy swiftly opened a short positions. What could have been a significant losses turned into a profitable move, capitalizing on those chaos. So now, let us get into how you can use leading factors in your own trading strategy. The first one, monitor exchange flow. Keep an eye on how much crypto is flowing in or flowing out of exchange. So like I mentioned, a high inflow can signal that large holders are getting ready to sell. This is a great early warning system. Second, watch the leverage ratio. When the leverage ratio is high, it means that traders are using borrowed funds to trade. So high leverage can lead to a big price swing and force a liquidations. If you see a leverage is climbing, get ready for a volatile move, upside or downside. Thirdly, use more on-chain data. Unlike traditional markets, crypto gives you access to a wealth of on-chain data such as wallet movements, transaction volume, and so much more. All of these are leading factors that can help you to anticipate a market shift before they happen. So here is the takeaway. Leading factors give you the edge you need to avoid big losses and stay ahead of the markets. In crypto, where things move fast, relying on lagging factors like closing price or past economic data just doesn't cut it. If focusing on leading factors like exchange inflow and leverage ratio, you'll be better prepared to react before the market moves. And trust me, when you make this shift in your trading plan, it can save you from huge losses, just like it saved me from losing $5,000. I hope this gives you a clearer understanding on why leading factors are so crucial in the crypto space. And remember, it is not just about following the markets, it is about staying ahead of it. So thanks for watching and keep crushing those trades.